Where did the money go in Q3 of 2024? In this video, we'll give you a breakdown of which asset classes were popular across the Australian ETF industry for the quarter and our top 3 funds in terms of flows. When we are referring to flows, we're talking about the net investment made into ETFs. The third quarter of 2024 was an eventful period for markets, beginning with a rate hike in Japan that threatened to derail global equity markets, and bookended by the US Federal Reserve's decision to commence monetary easing with the 50 basis point rate cut. In the US, falling interest rates were a catalyst for a broadening out of equities away from mega-cap technology stocks, helping the S&P 493 catch up with the Magnificent Seven. Markets were also buoyed by combined fiscal and monetary stimulus in China. While the details of the fiscal package are still scarce, the initial market response had been positive, reflecting optimism that the Chinese government is taking concrete steps to bolster economic confidence and aggregate demand. Here's a breakdown of ETF industry flows by asset class. International equity ETFs dominated the quarter, with net inflows of $4.63 billion. Cash and fixed income followed with inflows of $2.19 billion. Australian equities ranked third highest, with flows of $1.98 billion. Despite strong performance, monthly flows into the asset class slowly declined over the quarter. Here are the funds that got the largest flows from our own product suite. Number 1, Betashares Australia 200 ETF, ASX code A200. Australian equities had a stellar quarter as the best performing developed equity market, with 7 out of 11 sectors posting returns above 7% and only the energy and utility sectors negative. The standout sector was technology, with quarterly returns over 16%, backed by strong earnings reports. China's stimulus announcements also helped the materials sector post double-digit returns and outperform the financial sector for the first quarter this year. This could prove to be the beginning of a rotation from financials to materials, but support for this rotation will hinge on the success of China's stimulus. A200, our low-cost Australian equities exposure, saw net inflows of $532 million for the quarter. Number 2, Betashares Global Shares ETF, ASX code BGBL. Low-cost, broad market beta ETFs continue to see strong support as investors increasingly take a passive approach for core portfolio holdings. 80% of funds under management in the Australian ETF industry are in passive strategies. This is despite more active managers converting from managed funds to the ETF structure in recent years. BGBL is a low-cost, passive exposure to global developed market equities with a management fee of 8 basis points per annum. BGBL gained $446 million in net flows for the quarter. Additionally, the hedged version of BGBL saw inflows of $313 million, reflecting investors' desire for exposure without the impact of Australian dollar fluctuations. Number 3, Betashares Nasdaq 100 ETF, ASX code NDQ. Despite a return of negative 1.8% for the quarter, the Nasdaq 100 ETF continues to draw the eyes and dollars of investors. Q2 2024 earnings season for companies in the Nasdaq 100 was generally positive, with most exceeding already lofty earnings expectations. Nasdaq's mega caps have some of the highest earnings expectations in the market going forward, highlighting the importance of maintaining exposure to these market leaders if they can continue to meet expectations. NDQ saw $224 million of net inflows for the quarter. For more market insights and updates, subscribe to the channel. Thanks for watching, and we'll see you next quarter.